welcome to episode 27 of The Consistent Creator. And in this one, I'm going to talk about financial advice, criteria that I think we all should use when it comes to making any type of financial decision, whether that's investments, business, or real estate. So, I would probably say about 2 or 3 weeks ago, I was talking with my cousin, and he was asking me, he's like, hey, I'm thinking about doing some investing. What do you think I should invest in? Now, usually most people, when they talk about investing in the stock market, they want to know, what type of stocks should I invest in? And it's easy to say, well, these are the stocks that are doing very well right now. This is what you should invest in. But not all stocks are good for all people, because that depends on, what your goals are. So I'll break down the 3 criteria and sub criteria on how to invest in business, real estate, or whatever investment that you're considering making. So the first question you should ask yourself is, what is your goal? Yeah, that's right. What is your goal? Your goal is going to determine a lot of different things, but the first question you want to ask is, what is your goal? What I mean by what is your goal is in the sense that, are you trying to be financially stable, financially independent, or are you trying to achieve financial freedom? And all 3 of these levels are totally different. And depending on that goal will determine, what strategies and what type of action steps you take to achieve those goals. Now, for people that are financially independent, they want to make sure, financially stable. For people that are financially stable, they want to make sure that they're able to, pay for their bills and keep their certain lifestyle. And they don't want, things to change for the most part. So that's what happens when, you usually try to be financially stable. People that are financially independent go a step further and saying that, hey, I have everything, I have all my bills and stuff taken care of, but now I get a chance to really enjoy it. I really get a chance to, take vacations, invest in certain things that I'm really passionate about. So they want to become, financially independent. They don't have to worry about asking people for money. They're able to live their life accordingly based on the finances that they have accumulated. Then you have financial freedom. People that are financially free, money is no issue. They do what they want, who what they want, as long as they want. And financial freedom, I believe that all people should strive for financial freedom. But like I said, it depends on the goal. Everybody has, different freedoms. It just depends. Everybody has different goals. Correction. It just depends on what your goal is. So that's question 1. What is your financial goal? Question 2 is, what is your time frame? When do you want to achieve this goal by? Because depending on that goal of time frame, that'll also determine on, how things go. Are you trying to do something short term or long term? Those are the 2 main time frames, short term and long term. So I would usually say, and I would break that up into 3 sections as well. Are you trying to cash out on your return on investment in under a year? Are you trying to cash out on your investment under 5 years? Or are you trying to, cash out on your investment in decades? That'll determine what it is. So, you also have, you have a financial goal, but you have to see your time frame. Maybe you might need to change your time frame, or maybe you might need to change your goal. But your financial goal and your time frame need to be in alignment in order for this thing to work. They can't be, they can't be not working. So if they don't work, it's not going to work. They have to, be congruent. The third thing is also goes back to, what's your risk tolerance? What is your financial risk tolerance? So, with that being said, are you conservative? Are you moderate? Or are you, growth minded or high risk, high reward. So let's start with conservative. Conservative mindsets are based on not losing. So you play defense. Your whole goal is to make sure that you don't lose no money. That's your most important thing, is to make sure that you don't lose money. So with conservative investments, usually the highest rate of return that you get on a conservative investment is 5%. That's usually the highest, that you can get on that. On average, it's usually 3%. But like I said, the goal is not really to make money. With conservative investments, the goal is to protect and to make sure that you don't lose no money. So you're more concerned about losing money. Yeah, you make a little bit more. You're gonna make more than than going to the bank. But at the same time, you're not losing money. Then you have people that are moderate. Moderate, they have a little bit more risk tolerance. So yeah, they want to save money. Yeah, they want to protect. But at the same time, they want a little bit more return. They don't want to, really feel like they're being left out when it comes to investing. So their tolerance is a little bit higher, but they don't go, all the way out and really bet, because they're still afraid of losing money. Then you have the high risk, high reward, aggressive, abundance type of person that usually, they think long term, and they know they're going to have high highs and then they're going to have low lows. But they're not concerned about it. They're concerned about the net amount. And that usually in these are investments that can have 10 plus more % per year. So, like I said, they're okay. They're not worried about, the financial scorecard, which is what I'll talk more about detail in another episode. But the overall principle of the financial scorecard is you keep score of every single investment, in which what did good, what did bad, and you keep track of that. But when you have the high risk, high reward mindset, you don't worry about the losses. You know there's gonna be losses. You account for the losses. You only need a couple of big wins to compensate for those losses. Then they don't matter. So for me personally, my ultimate goal is financial freedom. My time frame is decades. I'm trying to do this in, I think in decades. So I'm thinking, 10 years down the line, 20 years down the line, 30 years down the line, where I want to be. God willing, if, I live that long. But I'm thinking in decades. And then on top of that, my risk tolerance, at least right now, while I'm fairly young and under the age of 40 right now, I'm, more of the high risk, high reward, in which I'm okay with losses. That's a part of life. Like I said, you're going to have high highs, you're going to have low lows. So I'm okay with that. I'm still young, I still have time, and I can make up for that. So, final word in this video, final advice is, when it comes to investing, number one, you got to be true to you, be congruent with you. But I would recommend that you focus on these 3 questions and focus on this criteria instead of focusing on a specific stock or on a specific set of real estate. You have to make sure that what you're investing in is truly aligned up into your values, because it doesn't make sense. This is a mistake that most people go on. They want when they invest in something, they want the maximum return, and they want the maximum growth, but they want the least amount of risk. So it's like you want to make 10+% on this investment, but then you want to have a conservative mindset, and you want to do it in less than a year. Those investments are usually not ethical, not legal, or there's something behind it. So, final word,